Hello and welcome. Today is Sunday, the 7th day of September 2014. My name is Derek. Welcome to this weekend's silver chart analysis video. And we're looking at the week ending September the 5th. Last weekend, the chart action was right in here, and I was stating because of this formation of moving to 1990, but then closing pretty much exactly where it opened within this downtrend is a very bearish pattern. And sure enough, the start of the week comes down here, and well, Wednesday, Thursday, Friday just moving sideways at the low 19s now, which I talk about failed move, fast move, failed move. Why was it a failed move? Because within what has been a sideways and downtrend action, it moves higher. And when it originally found support within this 18 average band, was unable to break or even make it to established resistance. Thus, it turned over in here. As you can see, it's now using that, it was using that band as resistance. The band, of course, turning into a downtrend and has been below it ever since. How much further down this leg has got is almost impossible for me to tell. After all, failed move, fast move. How much would I expect for a fast move? Well, at least down to here. So it's done a little bit more than the minimum that I would expect for a move of such. But there is no signs right now of this bear market coming to an end. The keys for me, step one, having this 18 average band flatten out. That's right now even a long ways away. Something like that. And then you get above the band, establish some level of resistance, come back to a band which should should now be starting to be going to the upside. Find support in there and then break resistance. That's what I'd be looking for. But the stage for flattening out is not even close right now. If we move this onto a weekly time frame, last week technically was an up week, but it was a break even, as it was only a gain of 1/5 of 1% at 0.21. This week the price action went down 27 cents, losing 1.39%. And yet another week below this 18 average band. But overall, that's a situation where in the summer of last year, it came down to 18.22 as a low, but really settled in at the low 19s, making this high up to 25, settling back in again at the low 19s. And then last time it went up to 25, this time it went up to close to 22, then it settled in at the low 19s again. This time 21.5 it got up to, so there's 1, 2, 3 lower highs in a row. And currently again it's settling in at 19, which if it is a bottom would be the third consecutive time it would make a matching low. What does this mean? Well, overall we have a situation where you are making lower highs and matching lows, and you have a descending triangle. So there's the matching lows you can just draw a line for. And then you could draw a downtrend line for the key points. You could draw it this way. You could draw it this way. It really doesn't matter too much how you do it. The bottom line is you can see that the triangle would be getting smaller, and the support level has not been taken out as of yet. Breaking down below this level here does have a decent chance of having very big red candles or a sum of 2, 3, 4 candles that could have decent size down moves within that possibility. For a bullish breakout, notice every single time when it gets above the 18 average that you get above here, doesn't even test it again. Above here, doesn't test it again. Above here, doesn't test it again. So the next time it manages to break above that 18 average, well, there's a lot of a lot of resistance levels, but the key is when it makes resistance, comes back to the band. As you can see, there's the comeback here, there's the comeback here, and then there's the comeback in here. That when it does, it would have to come back higher and then break that established resistance. But each time it has not done that, because when it came down in here, instead of coming back up to test this level, it had a leg lower. When it came back down here, it resisted this level for a decent amount of time, and when it just came back down here, well, it hasn't found support, at least as of yet. Let's move this on to a more longer term time frame, which is the quarterly chart. This period ends at the end of the month, so there's about 3 more weeks left within this pattern. And this, when you see the uptrend like this, a bull market from 2003, which we'll say will end in here, because if this level is the low, that means that at some point it's going to be going higher, and the most this 18 average band is going to do is flatten with a small move to the downside, as we can see it here. So it would be not really much of a down move. It would be, but it would be that of that failed breakdown. That's, of course, if that level holds. When we take a look at this 18 average band, it's pretty much got to get above the 18 average of highs for this to be in resumption of a bull market. Right now, that is set at 29.10. That is a long ways to go, but the overall trend is still higher, and any move lower would be really leg number 1 on the downside within the bear market. It would be the 3rd leg lower on here, but the first one happened in a bull market, which was in here. Comes down, right, a rising average, bull market sell-off. This one here was a neutral market sell-off, as it was riding within the 18 average band at the time. Now with the average declining, that it would most likely at most get up to here, which is not even looking as if that's going to be the case. And then on the break lower, significant move, breaking below 17, that's a leg lower. It's also the end of this long-term bull market, and that would either result in a multi-quarter bear market or one heck of a failed move. What does those two mean? One heck of a multi-quarter bear market would mean about 20, 30, 40 periods of lower highs and lower lows, which is about 5 to 10 years. That would be that situation. And then the price objectives, who knows how far it can go. Now, I'm saying this sarcastically, but with an ounce of realism. The ounce of realism is because the masses have not been able to get a grasp of what fiat currency is and the dangers and warning signs it has trading within it. I'm hearing today about this week, about fast food workers at places like McDonald's and such demanding for larger wages for minimum wage. I think they're even mentioning they want $15 per hour. And that's because we're all participating in a monetary economic model of fiat currency that guarantees debt to the simplest forms. It's the only way it can be created. Thus, it's 100% mathematically guaranteed for debt to exist. The more aggressive that loans are lent out, regressive is on 2 categories. 1 on volume, the amount. 2 is on interest rate, and they are both relatively high. Then the larger the intensity of the debt's going to be, which is the situation we're in now. Many people are in debt. If you go to the debt clock, take a look at the average debt per family and the average savings per family, and those numbers are skewed so large. So people are demanding the $15 an hour because they don't understand the idea that the fiat currency system is simply going to guarantee such, and by having their demands met, if they are, would not improve the situation. So that's the realism part of the major downside. So that's step one, or that's one situation that this turns into a bear market. Number two, of course, would be the trap, which would be a move down to here. These bands would start to decline a bit more, which would mean quickly after, within 2 to 4 periods, it would come back within the range. And then sometime after that, within 1 to 5, 8 periods after that, it would break above the range. That's the typicalness of a failed move. Thank you for tuning in. Now, I'm going to be kayfabing this a little bit right now, speaking to the fourth wall, although I don't have my face on the screen. And that is, I'm planning on doing a video on Wednesday. But if you understand my kayfabe thinking, something's going to happen and don't expect it. And I'll probably have to do it on Thursday. That's all I'm going to say about that for now. And I'll talk to you later on. Bye-bye.